Good morning, traders, and welcome to the Bookmap Advanced Education, the Pro Trader webinar series all week long. We've had some nice presentations here. Today we have Scott Pulcini, futures trader. You may have heard of him. This is similar to yesterday's with JTrader. You guys are getting free access to what our advanced education is like, and we do this every week. So, Scott presents every Thursday. He goes for about an hour, 10 a.m. Eastern to about 11. He usually goes to about 11:30, to be honest. And he's going to go through, read the order flow, the way that he trades, and uses Bookmap. And you'll find out more about that and his how he accesses stops and icebergs, etc. And the way he manages his trades and everything. So this is insight to what we do every week, and that's the Pro Trader webinar for today. So he also takes live positions. It is in demo, and I'll talk about that in just a second. And if you guys don't know who Scott is, I'll just go over it quickly here. Scott has been trading for over 20 years. During the years of 2002 to 2005, Scott was responsible for trading about 10% of the S&P E-mini futures volume. Scott now focuses on trading both equities and futures. He's an expert scalper and has an innate ability to quickly read the order flow and volume within price patterns, which is perfect for Bookmap. Scott's also a mentor and educator. He has a trading room. Go to his website here. You've got his email, you've got his Twitter feed, trading room. He's got an educational course that's on our Bookmap marketplace, and you can get special deals from Scott's link here. I will paste all of these into the GoToWebinar chat so you guys don't have to copy them down. Now I need to go through the disclosures, and then we'll turn it right over to Scott. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. All right, so know what you're getting involved in here. I need to mention this, especially since this is open to all today and free, so you guys get a taste of what we do here in the Bookmap education. It's demo, and it's not for shadowing. It would be just foolish to do something like that. It is about learning how he reads the order flow. It's part of the Bookmap education. You have an educational course, and you have daily advanced webinars every weekday. From 10 a.m. to about 11. And it's all forward-looking analysis, plus you have the live trading like today. All right, so risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. And with that, let's just turn it right over to Scott and let him take it away.
Right, Bruce, you hear me?
Yes.
All right, a little crazy right now. I'm trying to follow multiple things here. Obviously a head ripping off rally. What's funny about this rally is I was long overnight in my room. We talked about this trade, and in my fatigue, so you can see that traders that have been trading 20 plus years make mistakes as well, like stupid, ridiculous mistakes. So I was long from 85, 42, 85, just a couple, because my night trading sucks because I can't obviously monitor, but I had we talked about this liquidity level here. You can't really see it now, but you can see it right here. It was in there all day yesterday, and I said that was my target. And before I went to sleep, I put an order in, what I thought was a sell order. Instead, I bought more at this price and then woke up and came down here. The market was down here, and I'm like, you gotta be kidding me. So the point is, it started to sell off, and I just scratched the whole thing, but I cost myself huge money with an error. And I wanted to be long this, I was long this market, and I bought more at the pretty much the high, and then it sold off when I got out, and then we just ripped back all the way. So pretty painful start to the morning on a self-induced error, but you can see how it happens to the best of us, and you have to, you just got to be paying attention when you do stuff, or it can cost you dearly, and that one cost me dearly. So anyway, here we are. These are very important areas for crude, equities, ES, NQ, and gold as well. So you can see here, there's ES. This is a straight beeline move. We were talking about why I wanted to be long here yesterday at the close, structure-wise and that liquidity. We get broken out of this balance. We built more balance on top of balance, and then we're right in here when I got long yesterday and was shooting for that liquidity there. So now we've had a straight beeline move right into a very important area. You can see this zone that I drew here. So what's this zone? This zone is the bottom of this balance area that we broke down from. This is a very, very important area, right? So, when markets retest important areas, they tend to fail, at least temporarily, especially when they do straight line moves into those areas. So you can see we even had a little balance below the balance. And then this is where this whole directional conviction area started. So this is really telling what happens here as far as the structure. If we get through here, the next stop is probably going to be right around here, this 4460 area. That's the high volume node of this. So again, markets this is intermediate bearish, short-term bullish, right? So the short-term I showed you bullish, but intermediate, this is still bearish because we broke down from this bigger one and this one here, right? And all we're really doing is returning to this right now. So this is a place where this market could pause, and it's still, again, intermediate term bearish until we can overtake the high volume node of the balance area, that with the bigger balance area, the multi-week balance area that we broke down from, right? So markets can come all the way back, retest and do that. They can even retest the high volume node and do that. So until we can get through this, I still will consider shorts, especially now that we've gotten, I wanted to be long here, and especially I really wanted to be long here, but I didn't do anything because I was, again, put in the wrong order. But now that we're far enough away from the structure, you're not standing in front of a puke, right? That's what you have to be careful of when you if you want to short, you don't want to be shorting here, because all the traders that are short here have to get out. And that's how you have to think about it anyway. But now we're so far from this structure, and we're back into an important area we broke down from. I would potentially take a short here. It feels not good to even think about that right now, but I just have seen this too many times where you get straight beeline moves into important areas, and then it turns around. And not that we're going to do this, but we could definitely pull back, especially to VWAP area, right, before resuming upward. So the point is, I will take a short here. Again, it feels like I'm standing in front of a freight train, and most of the times those are the best trades. The ones that feel the worst are the best trades. So that's why I try my best to trade what I see and not what I feel. So so those of you who've been on my webinars in the past, I use structure, both the candlesticks structure stuff I just showed you, balance areas, market profile, and then I use the real-time volume to confirm my areas and the setups that I use, the 5 distinct setups to enter my trades, right? So quickly before we go forward, you can see here on the market profile, this is a very important area here too. The market profile is structure, but in it just it's showing you in a different way. So this was a composite value area that we had broken down from.
iceberg alert, sell 501.
So we've moved all the way back. These are the last few days. So 2 days ago, I was short on this. We failed to get in one time, failed to get on another time. Actually, I did not go short this. I take that back. But I made a playbook off of this that I'm sharing with my room. But anyway, this was a good sign at the time for a short. Tried to get in this market profile composite, failed, tried again, failed, got below VWAP, sold off, closed here. Then yesterday, Fed meeting yesterday, interest rates. We attempted to get out, pull back to the inside, attempted to get out, and then basically closed here. And then overnight, you can see we just launched right through here, right through this okay? And now we're here. So this is a very, very important area where we could pause and pull back, like I said, and here's that area that I just showed you on the bar chart, right? So if we, accept in here and I start getting some bullish signals, I will take a long, or there's that 44.60 area to the other side of this. The tendency for markets when they get in composite profiles is to go to the other side. But I will also take a short here if this fails, because again, we've had a straight beeline move. I've just seen this too many times, again, the straight move into an important area where it will fail at least temporarily. So I'd rather take a short here, even though it feels like, again, like I said, not so good. But if this doesn't mean this market can't do that, right? So if I'm using my volume signals to confirm which way I want to trade here, but this is one of those times. Again, I come up every day in my room, we go over the markets, I come up with a thesis on what I'm seeing from my experience and what I think is going to happen, and then I try to trade in that direction, obviously, right? But there's certain times where in areas where you can trade either way, and this is one of them right here. I could go long if the setup occurs, or I can go short. So then real-time volume, here we had a series of buy icebergs. They weren't huge, but they were still threshold. This one was 713. That's this area here. Where did it go? Here it is. So that was this. And I think we just got a stop run. So the stop run was inside this ice, and that wasn't even threshold. I mean, it was close. It was 500, but the stop run failed as well. So this zone is important. And then we came back, and you can see more buy ice. Here's another 1,000, same area. I can actually lower this a little bit to incorporate that. Which I'm going to do. What am I doing here? I should delete the wrong side of that. Hold on a second here. It's the one I wanted to change. All right, so there's your iceberg zone, a couple thousand in that zone. So the way I determine what's up, so I have 5 distinct setups. So I have a Titanic setup when the market runs into buy ice or an iceberg and holds and continues that way. That's a Titanic, or I have broken ice. So this was a Titanic setup. As long as you can get an ATR above the area, then that determines what setup it is for me. So the ATR right now is, you can see 5.56 points. So I'm pretty sure this has gone 5 points above. It has.
700 contracts.
So now what I'll do is, barring something else coming in, which it looks like it is right now. Let's see. Yeah, so you had combined close to 1,000 stop runs here. Then you have, this is probably, trying to see this. This is another 1,000 ice. So this could be a stopping point right here, right? So let's mark this up. I want to see what. So this is what we call a double whammy, right? So you have the buy stop run. So usually stop runs are the retail trader into. Actually, this is not a double whammy. I take that back. You have buy stops and buy ice. So this is not a very common setup. Let me get this marked and then. Okay. So what I want to do here is, I'm not really interested in shorting this up here because of what just happened down here, right? But if this fails and gets below this prior ice here, then I'll look for shorts and I'll look for a move down to that 16 area. Because the problem is, you could short this, but you have this setup here that held, right? You had this buy ice. Again, this was 2,000 buy ice here that obviously are winning, right? We've moved 9 points away from there. Yes, this could turn into a bearish setup where this breaks, but you guys it still has to get through this area that, whoever sold in this area into the paper, that's what the iceberg is. It's basically hidden orders that were buying when paper was aggressively selling. When this comes back, those sellers want to get out, right? So you may see, bounce off this area. So that's why I don't want to short right here, just because it's so close to this zone. But if we get below this zone, then I'll reconsider. If we get above this zone, I'm going to go long, right? Because of everything we just talked about, how this is a really important area. So we're trying to accept into this market profile composite. You see the real-time volume. If it can get above that ice zone that I just drew, then I'm going to go long, and I'm going to look for 44.60 as my first target. If these two zones fail, then I will take a short. So, if you want to be really aggressive, you could short on the break of this, right? This zone here. But again, this is just too close. I want to see us get below there. This market's just going crazy. And you can see the underlying stocks that comprise the index, the majority, the high percentage of the index, like these 5 or 6 or 7 stocks, the FANG T or whatever they call it, it comprises like 20–25% of the index, right? And this, you want to keep an eye on these. This is a software called Tick Strike. I've used it for a lot of years. They finally updated their software, but there's other things in the work that I'll be showing you guys here in the next few weeks or talking about that there's an alternative to this, so it's a little surprise, so we'll cover that at the time. But for right now, I'm using these, and it's just helping me gauge the strength of the market, you know, in my areas as well. So you can see they just keep buying these. So this goes from a 1 to a 15 level. So 15 is max. So that means they're basically buying these stocks max, right? So that just helps me as well. Like you guys have seen in my prior webinars, what I usually, the conservative entry in this zone, right? So if I wanted to get long here, if this breaks the zone, is to wait for an ATR move above, which we just said was right around 6 points, 5.5 points, a retest, then fail, and then you get in a half ATR, and then you take the trade. There's times I'll be aggressive right out of the zone. If all these stocks are firing off, I will be aggressive, right? So I'll make that determination. If this starts to move back up here, a half ATR, so say 3 points, which is 3 points above this, then, and these are all firing off, I will hop in immediately. So we'll get to that if that happens. If that's confusing. I know there's some newer people on here. You know, a lot of the things I'm talking about are pretty advanced where you'd have to be on prior webinars to understand. I don't have time. Obviously, if I'm live trading, to go back and talk about the elementary stuff, but you'll be able to follow here if I put this trade on. So this is undetermined right now. We're still in this zone. I want to either see us break above here and I'll go long, or if we get below these two zones, then I will take a short. So that's a yes. Any questions on that, Bruce, before I move over to NASDAQ?
I had a question, but then Omar also was asking about when you're talking about pullback to VWAP, are you talking about the 24-hour VWAP or the regular trading hour VWAP?
24-hour I use in the, so I put that on my 5-minute chart. So I use the 24-hour. This is just standard Thinkorswim VWAP, whatever their default settings are here. I'll show you. Shows the deviations, the 2 standard deviations for VWAP. It's today. That's about it. But yeah, it's 24-hour.
Okay. I was wondering about like looking at your volume profile. For anyone who's new in here, I mean, you can see what Scott's doing. He's looking, and he has a strategy that he studied on the higher time frame, and then looking at the order flow and Bookmap, and really drilling into the order types within the order flow, the stops and icebergs that is viewable with market by order data, and indicators from Bookmap that we can talk about later. But so are you looking for, what about the point of control? You're looking at the value area low and high from those previous profile areas. What about the point of control though as well?
Yeah, I will watch that as well. You know, it's not as important to me as the tops and bottoms in these areas, but yeah, and I'm going to show you an example of that here in another market. But yeah, we're real close to the point of control here too. So, you know, I don't like just, the biggest thing for me is if we accept in here, I'm not looking to short the point of control. Yeah, we could bounce off here, but I want to see us get back out of here if I want to short. I don't like when markets accept in market profile composites, the tendency is to get to the other side. So I don't want to just short here and hope it comes back and moves back out of here, right? The tendency is to get to the other side. So I'll pay attention, especially if it rejects it. That just gives me more confidence that this will fail if it gets back outside of this guy, right?
Okay.
But I don't, I don't really fade markets at the point of control, put it that way.
Okay. All right. And I didn't know if you wanted to show your webcam or mission control.
Yeah, I forgot about that mission control. Hold on a second here. You got me?
Oh, yeah.
Yeah, there it is.
It's NASA.
So I was going to show you, let's see, there's another market that I think it was gold, I want to say. Yeah, well, this was at the time, it was looking like it was going to bounce off this point of control and this move down. But this is a perfect example of what I'm talking about, right? So if you're like, hey, yeah, here we go, a straight move into the point of control, I want to get long. Well, what did it do once it accepted inside this composite? We went right to the other side, right? So that's why I don't like playing fades at point of controls. I'll pay attention. So again, if that would have bounced off point of control and got back out of this area, then that would have been go time for a potential long, right? But I don't just blindly buy point of control. And you can see why. This thing accepted in here and it went exactly pretty much to the tick to the other side of this prior composite. So now whatever way this breaks out of this is going to be the next big move, in my opinion. We're either going to retrace this entire thing. We'll go over gold and the structure stuff, but we're either going to retrace it or we're going to move down to the next big one here. And there was another one here that it could pause at from prior. Let's see what that is. So that one's from August. This one was from early August. This was mid-August. These two composites. So those are the next stops down. And obviously, this one's not too far away. But if we get through these, and then we're coming down here. While I'm on this market, might as well look at it. We talked about this in the room yesterday. How this was looking after the Fed. This was looking bearish once again. This balance that built. The Fed came out. It tried to break out of this. Not only was that a failed breakout and got through the high volume node, it was a massive selling tail, which is a signal in itself, right? That's instant rejection. And then that was also a failed breakout of this guy. So I told the room yesterday I was looking short, even though I haven't done it. I was short, and then the PMI came out and I basically scratched it. That was way down here. But structure-wise, this was telling you something was up, that this thing did that. We had a fail breakout of that, and you can see overnight what happened here. This is the tendency. This happens in all markets all the time. Here's the high volume node.
NQ stocks December stopped by NQ 163 contracts.
I'll come back to that in a second. I don't want to miss the live trades showing stuff that already passed. Let's see what we're doing here. All right, so this was ice right before I got on here. I drew this. You can see these zones here. Actually, this was humongous ice. I should have been all over this. I forgot. So we're just breaking out of the zone now, but I will go along this. You can see 605 buy icebergs in NASDAQ, which is a lot. That's this zone here, right? And we just basically been bouncing around. So I was looking for an ATR break out of here, retest, fail, right? So ATR right now is 20.76, so 20 not ticks, points. Right, so we still haven't technically got an ATR out of here, right? So that means I need to see 21 points above this zone to confirm this is a iceberg Titanic setup, right? So that was top of the zone is 25, so I need to see 46, right? Then this is the conservative entry, right? You could go long aggressively, but first and foremost, so the conservative entry is wait for an ATR to confirm this is a Titanic setup, wait for the pullback. Then when it retests, fails, half ATR, you can get in, and your stop goes a full ATR plus a few points to get out of that range below here, right? So again, we still haven't gotten below here. I mean, a full ATR above here, so that we still don't really know what this is officially. And if this comes back above here, and these are all firing off, remember I was talking about an aggressive entry, I will go long this based on this huge iceberg that's holding right now. So FATR, what I say, we were 21 points. So we're looking at 10.5 points above here. So I'm actually glad I missed this because I probably would have hopped in, and you guys, basically every webinar I've been on, I've been aggressive every time it's done that. So I'm glad I missed that trade because I would have been right around 35.5. But if this comes back again and these are firing off, I will go long at a half ATR above here. This is the aggressive entry, right? Or you can wait for a full ATR, retest, fail, and then get it. Those are the best entries, but the problem is you might miss a trade, right? Because what I talk about all the time is about 80% of the time, the market will retest this area after moving the full ATR away, but 20% of the time it just does that, and then you're sitting here beside yourself that you didn't get on the trade. So what I'll probably do is just do a half position once if it comes back up here in these stocks. That's the aggressive entry, and these stocks are firing off. So we'll watch that. Let's check ES, what's going on here, and then I'll cover gold a little more. So ES is still in the zone. So let's take a quick look at structure NASDAQ. Again, really important area. Same look, right? So you can see this was multi-week, and that's about a week, Friday to Friday, balance. So we broke down from this guy. We built balance below balance, broke down from that, and then built low balance, broke down hard, gap down from this exact area, right around this balance area. And now, again, short term, we were bullish, balance breakout, but now we're far enough away from this. Now we're coming into an area where this could do this, or if this gets a little higher, like if this bounce, if I get my signal, this is exactly what I look for, right? So now we're getting that iceberg right here. So this is telling me if this holds, we're coming to the high volume node of this. And that's right around 15.4, a little higher. So that's almost 100 points higher that this trade could produce, right? So again, I look at my structure, I come up with my thesis. So we are basically through this zone and I see that ice. So I will go long. If this fails here and and that ice breaks, then I'll go short and at least watch it move back into here. So again, this is another market right now where I can trade either way. It doesn't happen that often, but this is what they call an inflection point. It can either do that or do that. And I'm going to base it on the real-time volume, which is the most important thing you can be looking at, and how it reacts. Right? So based on this huge iceberg, whatever way this breaks is basically the way I'm going to trade this thing. Another thing you want to pay attention to is exactly what we saw yesterday. Where's all the liquidity? Right here. Where do you think we're going? Right here. We talk about it. I've been talking about this for 2 years on these bookmap webinars, whether it be stocks, futures. This is the big money. The big money gets their way. It doesn't mean it's going to just straight beeline right into this right now, but trust me, we will get up into this. And that's exactly what we saw yesterday when I got long the ES trade that I somehow screwed up overnight. That's exactly what we saw, was that liquidity was in there the entire day yesterday going into the Fed. That's another thing I stressed in my room. Yeah, so this shows right here, right? So this was these two bands of liquidity. These were in here, and this is going back to last night, right? These were in here before the Fed, into the Fed, after the Fed. So when that liquidity sits in there like that, that means they want to get filled, right? They're not afraid. What if the Fed would have been the most, bullish thing ever, and it just would have ripped right through there? Well, they want that. That shows you they want to get filled, right? They didn't pull that liquidity before the number, meaning it's a very, very high likelihood we're going to get up to here. Why? Because they'll find a way, because they're the big money, they're the big players, and as it gets closer, inches up closer, they'll push it into their liquidity to get their fills. And you can see when I put my backward order in here like a complete tired moron, when I should have been selling there. That's what we took out the first time. We moved down, and then we came up and took out the other liquidity. Now, this is where you want to be careful, right? You look at this, and you're like, well, what does this mean? There's a lot of liquidity. I don't pay attention to liquidity that just pops in the order book now, right? That's just algos most of the time, right? Or it's guys trying to spoof the market, so on and so forth. Like this liquidity I'll pay attention to because this has been in here since before the open, right? I'll pay attention to that liquidity. This liquidity you can see is just algos. I'm not interested in it. You see how polls puts it in, polls like this is just games. These are not games. And the tendency for this market to go, these markets to go to liquidity is extremely high. So, you know, in the morning when you're coming up with your thesis and you're looking at your charts and you're like, okay, this is bullish. You know, this is when we're way down here, right? We gapped up overnight and we were here and you're like, okay, this pulled back. I know we're pulling back to the top of this balance area. And I know there's big liquidity up there. I want to be long, right? That just helps you with your thesis. And it also helps that we pretty much always go there. So you can see there's liquidity up here. So I'm, you know, I said I will get short if we break this area. I will, but it doesn't mean we're not going to make it up to her eventually. You know, see what I'm saying? So I'm basically going against the grain because I have a feeling, I don't even think I'm gonna have to worry about it because I don't think we're going to get below here. I think we're going to break out of this and I'll go long. But I will take the short as well because it doesn't mean we're going to get there right this second, right? I know that sounds a little contradicting, but you know, I will take a temporary short. And if I short this, it's not, I don't think we're going to pull back 100 points. I think we can pull back, you know, 15 points and then resume upwards. And then once that happens, if I get another long signal, I keep this in mind. So the point is keep the liquidity in mind when you're doing your overall thesis. You'll, trust me, you'll be on the right side of the market. As you can see here, look at this. You see anything below here? Nothing, black. There's liquidity above here. So the odds are we're going up there. And it looks exactly the same in NASDAQ, right? See that? Black, liquidity. Where do you think we're going? Wherever paper wants us to go. Paper meaning, you know, the big money. The house is the big funds. Other things that I look at, I haven't looked at them a ton lately here because I took these off my chart to help my book map flow easier. These are the ETFs. A lot of times you can get some good views of where liquidity is on these. Sometimes it's very straightforward. Sometimes it's confusing. This is not straightforward to me. So you can see here, little liquidity here. There's much higher liquidity here. What does that mean? Who knows, right? I mean, this is not clear to me, so you can't really trade off it. What's probably going to happen is we'll probably fill all of these, and then it'll come down and fill all those, and I'll have the ultimate, you know, 40-point scalp. So that's not helpful. That's QQQ, SPYs. See if that looks any different. So not really seeing anything in here. Well, there's a little bit above, right? And then this is pretty funny to watch too, right? Like you can tell this is one house. Look at this, how this like blocks off, right? Disappears, higher. So it's like, you know, this is the same person, big player, big house, big fund, whatever. You can just see it, like it cut off there and then they moved it up here. So whether they get their fill or not, who knows, but you can see there's liquidity up here too. So I'll glance at this to take it, you know, get an overall, because there's going to be some days where you'll just see nothing, kind of like you see now in the futures, nothing down here, and you'll just see bands of liquidity. And you know, that's where we're headed. You try to find your best point to get long based on your real-time volume signals. Any questions on that, Bruce?
Nope.
Good. All right, so these are basically just sitting in limbo. Remember, I will get long this half ATR above here if these stocks are firing off. Again, ATR is, now it's down to 20, 19.93. So 10 points above this zone, I will enter a long. If these are firing off. If not, I'm going to wait for a move away, retest, fail, and then I'll go long. Other stuff we look at, talked about this many times in this webinar. This is called algo guy. We call it in my room algo guy. All this is an exponential moving average. The blue are the shorter term moving averages. The red are the longer term. A lot of guys trade this. There's different ways to trade this thing. Like when it crosses, you can see, and if this thing crossed, it was just a trend up. Other way guys trade, again, I learned this from one guy that I mentored. I do not add things into my trading very lightly, right? The less you can have on your charts, the better. That's all I ever do is preach that. So you're not getting contradicting signals. I mean, there's guys, you know, that have 55 things on their chart. And again, there was a guy in the room the other day. He actually showed me some cool things, and he's he obviously has the bandwidth to look at a lot of stuff, but it's still not good. We did a playbook session, so we did that in my room because that's the most important thing you can do in trading is come up with playbooks, distinct setups that you look for and you wait for like a sniper. And when you see them, that's when you trade. You don't just trade to try to catch moves, right? So anyway, he presented, and a lot of stuff he talked about was valid. Like I liked some stuff that I had never even heard of, like for instance, had never heard of, but I didn't know you can do it. Like on Thinkorswim, I didn't know you can do this. Been trading how long. I didn't know you can have like a synthetic product here where you can add. You can see this is Microsoft plus Amazon plus Facebook. So basically the FANG stocks. I didn't put Tesla in here, but so this is like a synthetic view of all of those stocks combined. I didn't know you can do that, right? So that's one of the great things about a trade room is guys collaborate and you come up with different ideas. But I'm very wary to add anything to my charts without watching it for months and months and months. So back to this, a guy that I mentored showed me this is how he used to trade, and this is exactly the trade he would take. He would wait for a pullback into the longer term moving average, and as soon as it got back above the blue, that's the trade he would take, right? So that's another way you can trade this. But the way I use this, I don't trade this in a vacuum. I don't trade anything in a vacuum, but I will pay attention. Hey, is this bullish or is this bearish? Is this crossing? Then you got to be careful. Things like that. So I keep an eye on that. And then, that's basically all I use. And then again, I know Bruce doesn't love the footprint, but I use this for years and years and years, and I was at best an average trader. This is before Bookmap. I just think this kind of gives you an idea. You can see the relative volume coming in, and you can see, hey, are the sellers offside, are the buyers offside? So I started using this again recently. Again, I used it for years, and I had to get out of the business. I got back in the business when Bookmap came around, let's put it that way. So that's why this is not an end all be all at all. You can go down a rabbit hole with this stuff, but I like to look at it just to see the relative volume and what the aggressors are doing. And there is a way to look at this on Bookmap as well, but I look at Bookmap. I have so much stuff on Bookmap as it is. I just like to glance at this, right? So you can see here as this came up, sellers, 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 some buying, sellers. So these sellers were wrong. This is not a small move. Let me get the prices here. I have it condensed so you can see here. They've been selling this thing since basically 44.10. How did that work out for them? Not good, right? So it's like they sell it, they got to puke it, sell it, have to puke it. Sold more. You can see this is almost the exact same delta, right? So the delta is the aggressor. So there was more aggressive hitting in the bid than obviously buying, and then they were wrong. And then turn around, almost the exact same delta going up, right? So it just helps you, but you can go down a bad rabbit hole with this stuff, right? But I like to keep an eye on it with my Bookmap stuff. Bookmap is number one, obviously. That's why I'm on the webinar. All right, so we're still in this ice zone. So, when I'm showing you guys is ways I trade it by using this thing for almost 2 years, right? You can say, you know what, this zone is important. This market's very bearish. Hey, we're pulling back to the red algo guy, whatever you're looking at. This is the most important, the zone. But you say, hey, I want to get long right here, right? I don't want to do that in this situation because this is a inflection point. Like I said, this could be this could stop right here and turn around and pull back to this stuff. So that's why I don't want to do that. But you can come up with your own variations of. The zones are the zones. The volume is the volume, but you can say, hey, you know what, Scott, I don't like Scott's method of waiting for move, ATR, retest, fail. I want to wait for the bottom of the zone and I want to give it a shot and just risk maybe an ATR below the zone. And that means I don't have, because guess what, if I get in here, wait for this, and I get in up here, I got to risk, 30 plus points. If you're getting in right here, you may only have to risk 5 points. And if this holds, which it does all the time, now you're risking 5 points to make, it's going to go 30 just before it even gets into where I would enter. Right, so you could come up with variations of these zones. The zones are the zones. Those are black and white, right? It's black and white that this was 500 buy ice right here, right? That's black and white. But how you play these zones, you can come up with your own variations. From my experience, it's dangerous to be buying at the bottom of this because this could just do this, but you don't have to risk much, and you could be, it could hold, and you can rip away. So. There's different variations of playing the zones, put it that way. But these are the way I play them, are just from my experience of watching it for almost 2 years now. So just know that you can have variations to those. Just a whole lot of nothing going on right here as we digest this area. So, the longer we sit here, the more likely we're going to probably break higher. All we're doing is, this is trending markets have the tendency to do, not the tendency, they do, directional conviction, balance, directional conviction, balance. So what other things can we look at to figure out if this is a trend day? Well, you want to look at ADD, advanced decline line. This is again standard. You want to see this, usually if we're going to be trending, this will be over 2000. All this is stocks advancing versus stocks declining, right? Trend day is when you get above there and it holds and then does this. This is still bullish, right? We're plus 1600, but this is starting to pull back a little bit. So it's not really trend day material yet. It could get there. And here's your this thing that I just found out about or learned about, which is kind of cool. I didn't know this. And I think Bookmap is in the works of coming up with some synthetic stuff. You haven't released that yet, have you, Bruce? Where you can overlay all these different products, or have you?
I'm sorry, I don't understand.
Kind of like you're doing with the Bitcoin. You guys sent out an email the other day where you can overlay all the different exchanges so you can see liquidity. I thought you guys were talking about you're coming up with a functionality where you can have a synthetic product, right? So yes,
yeah, you can do that now in futures.
It's been out.
Yeah, I'll show it to you.
Okay.
So I mean, basically, it's called multi-book. You guys may have heard about it. Let me just give a quick overview so it just answers questions up front here. If you want to look at Bitcoin, Bitcoin is obviously from multiple exchanges. Each one has their own price. So and own liquidity. It varies greatly. So if you're looking at in Binance, for example, that's a pretty big one. But you want to add in others, you can look at one Bitcoin symbol, but it all is consolidated in one chart from 5 different exchanges. The way it will work in futures, you can add different whatever symbol you want to it in futures, but you're going to have kind of weird pricing in there, so it's better to maybe do calendar spreads on rollover, for example. If you want to look at the ES December contract versus the March contract or something like that, or crude 1 month versus the next, November versus December.
All right, I'll have to check that out.
Yeah, I'll show you it.
Okay, cool. All right, so again, like I said, this is a really important area, and these markets are still intermediate term bearish. So this is an area where this could fail, and this is why I said I can go either way. Once again, this is where this whole move started, and this is where we got to, right? So this could fail. If this ice fails, I will go short, and I will watch a move back to either the top of this or the high volume node, depending. It could go right through here, but these are 2 areas that can stop, right? It's the same stuff all day long. So this is, this is 80 points away, 15,220 area just to get back to the top of this. I think that could pull back there. Doesn't mean we can't do this, this, and then this, and then go hit that liquidity I was showing you, right? But this is an area where this is why these zones are drawn, right? So, and you can see, like, once you learn how to draw these zones, and I'm in the middle of making a course, it's going to come out one of these days. I just had a lot going on, but you can see how it'll correspond with prior areas, right? So you can see this was an area where we launched directional conviction, and then I could have made this a little bigger, but you had support, and then this was actually the bottom of this, and then you had a balance here, and then you had directional conviction here. So you start to see, like, these areas, they just have confluence, and they continue to be important, and this is one of them, right? If we get above there, that's telling you something as well. And I think we're going to at least the high volume node. If we get to the high volume node, then the market is not intermediate bearish anymore. Now it's bullish, because this would be an official failed breakdown of this structure, right? So I will, again, this is an area I will trade either way if I get the opportunity, or I could just sit in the zone for an hour and a half and do nothing. All right, some other markets. This is really important. We just got through here. So I do want to show you something from yesterday, very important. We saw this, I've seen this twice now in crude where, and again, this is where the footprint can come in handy, right? So we saw it down here this day. nothing but sellers all day long. Like it was, and I'll show you on the footprint here in a second what yesterday looked like, but it was like negative delta. Every 5-minute period was negative, 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 and it kind of just sat here. And I'm like, okay. And I kept trying to get long, and it really didn't do. I didn't really lose that day, but it just didn't do anything that day. And then we opened up, gap up, and then that was it, gone. Same exact thing yesterday. In this area here, it was just nothing but sellers all day long. I'll show you that here in a second, and then look what we're doing, right? So now you can see this was, when I got on the webinar, we were right here, and this was going to be the same thing as you see in equities, where we could have paused and did this. We're through here. This thing is going, this is going to be really great for gas prices, not, but this thing's going to rip, right? We got through here. This is where this directional conviction started. These were balance areas. This is where we tried to break down. Here's we came back, tested the volume node, failed. This was a very big area. We just got through there. So now I am looking nothing but long in crude, right? And there were signals here. I had a ton going on. I didn't take this down here, but you got the, of course, the pullback here, so you can see this was right here. Here's your 177 stop run. This is what we call one of my 5 setups. My SI indicator course. This is a stop and hold, stop run that holds, right? To hold meaning the big money comes in behind it. It's just not the buying of guys puking. Now the big money comes in and propels it higher, right? And let's see what happened here. Got a little bit below it, but we did not guarantee it wasn't an ATR below it, right? So the ATR is 15. It was right around that. Probably would pull back there. This never got 15 ticks below there. Held, gone. And then you got, here's your ATR above. This is what I talk about in crude does it number one.
December iceberg sell alert that he has 734 contracts.
I'll come back to this in a second. I just don't want to miss a trade here. All right, now you got some, it's just not showing me the quantity. Some sell ice coming in. Not huge, still in this zone. So once again, break of the zone is going to be, and what I will do here, I think I already said this, but so ATR is 5.5, 5.45. So if this gets an half ATR above here and these are firing off, I'll go long this. I think I already said that. I know I said it in the NASDAQ, but so meaning we're looking at 2 3/4 points. We'll just say 3 points to make it simple, right? So 44.5 would be a half ATR. So if this comes up, we already know what's in this zone, right? Now we're talking, whoa. Now we're talking probably, 3,000-4,000 contracts in the zone, mostly buy ice, but now here's some sell ice, right? This launches out of here. I will go long. If these are firing off, I will go long aggressively out of here. And then we're headed up to that liquidity. And here we go. And you see
S&P December stop buy alert that he has 659 contracts.
There's 43. My other column as well. All right, so we're long. Hopefully this doesn't turn into a Dumb and Dumber setup on the stop run. Of course, I bought right on it. All right, so let's draw this. I'll take it on the chin on this one. What I should have done, I heard that stop run go off. I should have just waited for us to clear this area, and so I just jumped in again, because this doesn't mean it's real buying, right? This is a stop run, meaning it's most of the time retail traders puking. I'm just hoping this can hold, or I'm gonna take it on the chin. I was aggressive. I saw these stocks firing off. That's why I did this. But when another setup's firing off, you probably want to pause for a second, especially when we're in an inflection area like we've talked about. All right, so I'm going to cover half these until we can get out of this zone. There's no reason to take a huge loss here. Because again, this is a new setup, right? I want to see buying propel this out of here. Real buying, not a puke. So I should have just waited again. I'll keep 3 on, see what happens here. But if this gets above this zone, then it's go time. And I think we're going up to 60.
Gold ice GC 150 contracts.
Gold's going to 0. Free gold for everybody. All right, so let's watch this. Again, this is, I wanted to be long aggressive there, and I did, but then something else fired off. So I want to see this clear, and then I'm going to be long. I'm going to add to it. Again, you had another 700 sell ice that was in this zone. Okay. So let's see what happens here. So my stop for this is going to go, what I was going to do, and pretend this didn't happen, I would have gone an ATR below this, plus, I usually go plus a point to get out of that range. Now this is a new setup. I'm going to trail my stop to an ATR below the bottom of this zone. So again, ATR is 5.5, so we're going to say 6. So just make it easy. So 6 points below here is 35.50 plus 4, so 34.50. And that would put me outside of this zone as well. So that's, I like that, because I don't like getting stopped out in the middle of the zones. You guys have seen webinars where that's happened. So there's my stop for that 3 lot. If this breaks above here, I will add to it, stops them going in the same spot. I'd really like to see these stocks participating to get out of this thing. Let's check NASDAQ. So again, NASDAQ never got an ATR below here. ATR is 20.5. I never got 20 points below here. It got about 8 points below there. Now we're trying to launch. So what did I say? It's FATR's 10.5, 10.25 points. So meaning this looks like it's holding. Remember, this is 500 buy ice. This didn't get an ATR below here, so this is still a Titanic setup. Right? If we get above here.
Crude stocks stopped by CL, 301 contracts.
That's what I was just showing you guys. I want to buy that. All right, so now I'm getting in this as well. I'm only going to put on the half right now because this is I'm risking a lot more here. I'll get into that as well. Like as far as risk reward, like my stop has to go now an ATR below here, right? So I'm talking the size of this zone, which is that's 15 points. An ATR is another 21 points. So that's 36 points plus. I'll go another point to get out of the ATR. So that's 37 points below the zone. I'm sorry, 27 points below the zone I have to go. So that's 93-ish. I'll come back to that, make sure it's accurate. But so again, you gotta make sure you're not over trading for your account size, right? If I'm risking more here, I can't be putting on full size if I have to risk 40 points on the trade. But actually, I could put on full size. I think. Let's check it real quick. I can cover this for you guys too. Usually I have this all mapped out. It's just when I'm doing these webinars, I'm jumping from product to product. So you can see here. So the spreadsheet we have in my room. So this is based on my account size, right? So you want to, basically what you need to glean from this is 2% of your account size is what you should be risking per trade. That's even high, maybe 1.5%. But if you're trading micros and you only have like a $13,000 account, you don't even have to change this because this is based on the full size. If you're trading micros, it's the same thing, just 13,000. Then you put on, for instance, so I'm risking 40 points, right? So I can have 4 on or 3 on, right? If you're trading micros, you can have 3 micros on based on a $13,000 account. Because trust me, if you only have a $10,000, $15,000 account, you need to be trading micros. You're trading too big if you're not. Hold on a second here. I'm gonna put on one more because I should. And you want to be consistent with this too. You don't want to be one time putting on 1, another time 3. Base it on your account size. Be like an algo. You're putting on this. You're based on what you have to risk. You're risking 2%. You put on that amount of size, and you can't change it because you don't feel like this doesn't feel right. Right? Just be consistent. You've got to be consistent with that stuff, or you're not going to make it in this game. So that's that for right now. So long both equities. We only have a position on here. Do we get an ATR above there? No. We didn't even get a half ATR above this stop zone. All right, so the other market I want to buy is crude, what I just showed you guys. So if this turns into a stop and hold, I will be long this as well. So here's the stop run. You can see it on the chart here. You can see where it started. You can see the spike on the sub chart. 300, 300. This just helps you determine the area much better for me. Your stop run, you want to make sure you incorporate all the prices.
Wheat stop price 260 for contracts.
I got trade
Wheat
as well.
iceberg sells 155 contracts. Wheat stop price 297 contracts.
Alrighty. Looks like wheat's active. Go there in a second. So again, it's ATR, say 20 points. So I already went over why I want to be long this market. We'll look at market profile here in a second too, if I get a chance.
Notable 2. Iceberg sells EW contracts.
So ATR is 15, 14.76, so 15 points. So meaning this could be either a stop and hold or a dumb and dumber. We don't know until it goes an ATR below or an ATR above. This market has the most propensity to retest the zone. So I will let this go a full ATR above, retest fail, then I will get in. I've learned my lesson getting in aggressively in this market, right? This is a perfect example of one that did that exact thing, right? Here you go. When we finally did get an ATR above here, I don't think this first one was. This one definitely was. Here's your retest. Here's your fail. You get in a half ATR, and you're already 40 plus ticks in the money. And then what you can do based on these setups, say you did get long off of this one. If this fails, then you're out because this would be temporarily a bearish setup, right? And then you just wait for your next one. You don't want to see this fail. If there's truly buyers in here, this should hold and it should go higher. If it fails, you just get out. If you're trading off a bar chart, you have no idea. You're just sitting there like, well, this looks bullish to me.
160.
This looks bullish to me. Like, what? I don't understand why did this fail? Well, because you have bookmap real-time SI indicator, real-time buy, and you know exactly why it failed. There was a stop run and there was no real buying behind it. That's why it failed. That's pretty important information to know, where you're not just sitting there holding the bag as this thing sells back off, it comes all the way back, and you're like, well, what happened? Well, you know what happened. There's 300 buy stops. Is there any big money willing to hold this and push it higher? Or is it just the dumb money that puked and is going to turn around and sell off, right? I say it every webinar, if you do not have, you're not using real-time volume in your trading, you just don't have all the information, period. Whoops, no, I'll do that. All right, so I'm hoping this thing can hold this nice zone now. It's just, again, I wouldn't even have been in this yet because of this setup. Remember, that's why I covered half of them, but I'm willing to give this a shot to get higher. Because again, I was playing off of this ice zone, and then this came in, and this could be a dumb and dumber. The exact same thing I'm showing you in crude, that's what this can turn out to be, right? So I want to see this get above here, and then I will add to this position. NASDAQ, of course, by the exact high tick. I'm fine with it. That was the aggressive entry. Again, this is still never got an ATR above here. Retest fail, right? That's what you can wait for if you want to be more conservative with the entries. It just seems like every time I do these webinars, when I enter aggressively, it's immediately in my face. But that's what it is. All right, any questions, Bruce?
Yeah, a few questions on, well, your settings, I guess, maybe on the ES, like, you know, why, and maybe explain like why you're looking at spikes, I guess, instead of, as you know, I like to look at the summation, but maybe cover that. And then also James has a question on ATR. If you can explain the ATR projection and setup.
So one second, let me, so this in wheat is, you can see here, monster stop runs over 500 in the waiting hands of sell ice. That's a double whammy, we call it, right? So majority of the time, this is like a stopping point, right? Because again, it's not real buying, it's a puke, and the big money is basically absorbing the puke and saying we think this thing's going down, right? So this is all in a vacuum. We got to look at the structure and everything to determine, if we want to short this thing. But it's actually, I use the dark blue for double whammy. So let's get that drawn. All right, so if that zone fails in NASDAQ, I will flip and go short, right? Again, this is a really important area. I'm giving it a shot. If it fails, I'm going short, and I think we can move down 100 points down the other way. So we talked about why that was an important area. So you can see here, huge stop run, 626 into the sell icebergs. And there's a little buy icebergs, but this is a really important area. Actually, I can make this a little bigger. Of course, they're starting to sell equities. I can single-handedly stop that market. Markets. All right, so we'll keep an eye on this because I'm definitely want to check. That's a huge size. You're going to get a big move out of here either way. So let's just quickly look where we're at on the big picture. This is iffy, right? So this is a failed breakdown. Got to the high volume node, but now where are we? High volume node of where this broke down from. So this was obviously bigger as well, and you can actually just do one of these, make this one big one, right? Broke down, retested the bottom. Remember we talked about the areas so this was still bearish, right? Even though it came back, retested the bottom of this, failed. It could still be bearish. Here's that zone, which is the high volume node of this. It could still do that and still be bearish, right? So I will still lean, even though we're out of that zone. If this zone fails, I will still go short this market. If we get above here, this is where I want to be long, above 70.30. So I'm not going to go long that setup, but I will go short because if we get above this zone, I will go long. I'll look for longs. Hopefully that makes sense. So let's see if this fails. I will short that. Let's see the beating I'm taking here. I'm going to make a rule for now in these webinars. I'm only going to enter positions conservatively. I'm not going to be aggressive anymore. Every time I'm aggressive, it's like that's the high tick. This one, at least I refrained because again, you saw this Dumb and Dumber. This is now looking like it's a Dumb and Dumber. Let's see what the ATR is, and we'll cover the ATR question. ATR is still 5, so did we get 5 cents or 5 points below here? Sure did. We only got about 3. Right? So this still could be a stop and hold. If this gets 5 points below here, then it's officially a Dumb and Dumber setup, meaning stop run, no follow through, the dumb money puke, failure. Right? So we still don't know what that is.
Yeah, there's a few questions about ATR in here, and I mean, basically, correct me if I'm wrong. Just to try to paraphrase here. I mean, you're using this as understanding the market structure and the market behavior, and then you're using ATR to manage your trades.
Right, it's just a dynamic way. So before I used to use, when I first came up with these setups, I used to use just a set number for these products that from watching it over and over and over, the standard, which is still good 80% of the time, is 10 ticks in crude, right? So to determine the setup. So as long as it doesn't move 10 ticks below the zone, so say this moved 10 ticks below the zone, which it did, this would be officially a Dumb and Dumber, right? Or if it doesn't move 10 ticks below and then moves higher, that's a stop and hold, right? So I would use 10 ticks for gold and crude. I'd use 10 points for NASDAQ. I'd use 3 points for ES as a standard. But the more I got into it, the more I started to be a little more dynamic, which makes sense, where now I'm using what the volatility is for that day, right? So that makes more sense, where if the market's more volatile, I want to be using what on a 5-minute chart, I want to be using what that ATR is. So instead of 10 ticks, we're looking at 15, right? 14.5, I round up. So 15 ticks instead of 10, because it's just incorporating the volatility of the day. So 95% of the time, I use the ATR of the 5-minute chart. 5% of the time, I will use 20% of the hourly. So you can see 20% of this hourly is round up to 60. So 12 ticks versus 15. When do I use this? Like after a number, right? Where it's just like a one-time event where the number comes out as a big spike.
December iceberg sell NQ, 151 contracts.
Nice little sell off into my positions. Of course, let's see what's going on there. But if it's a one-time event, I'll use 20% of the ATR for the hourly. Other than that, I'm always using the 5 minutes. So hopefully it makes sense. And it's just a more dynamic way to incorporate the volatility of the day. That's all it is.
Okay, yeah, I mean, we're pretty much all caught up on questions.
Okay. All right, so again, if I get stopped out of this NASDAQ, I will be looking to go short, especially, so say for instance, this does this, stops me out, we get an ATR below here, which this is an ATR below here, it comes back, it retests, it fails, I will go short this setup, right? I mean, this is probably like the 8th time this has happened where I've bought aggressively instead of just waiting for the retest failure, where it's literally been 9 tick and go. So it is what it is. I'll stop out of this. And I'll look for a retest failure.
NQ ice December iceberg sell NQ, 150 contracts.
I have a new setup here too. 150 is, that's my threshold. And this was 150. Most days it's a little higher. Today, 150 looks like it's adequate. Let's watch me now get stopped out to the tick here and then move all the way back up. Come on, you can do it. So let me draw this zone here real quick. So like I told you guys, that was an inflection area. So I should have just been conservative on that entry because again, I just got done saying for an hour that we could trade either way out of that zone, right? So when you find an area where it could go either way, you shouldn't be aggressive. You should be conservative. I'm talking to myself, you know, but I'm trying to put on trades here for you guys, and you know, that's not my excuse. It's still, you know, I still should have been conservative, but it's a perfect example. So the idea of these webinars are for learning for you guys, right? So that is a great learning experience. When you look at a market and you say this can go either way here, you certainly don't want to be aggressive. All I had to do is wait for this thing to get an ATR above this huge buy ice, retest, fail. Like, why am I being aggressive when I just said this area could go either way, right? So that's a good lesson for you guys. Like, hey, you know, I want to wait. If you're using these setups, I want to wait for a retest failure, then I'll get on the trade. There's my stop. That should be it. So now though, what I will do, I mean, this is a new setup as well. I mean, am I imagining that? Like seriously, it's every time. You guys should see in the room. I sit here and it happens 5 times a day. It's amazing. Look at that. All I can do is laugh at this point. Anyway, if this comes back now to this zone, I can actually even see, but the thing is this hasn't got an ATR below this zone. So I'm looking right now. So let's say if this comes back, I wouldn't short off this zone because we have not got an ATR below there, retest fail. I will short off this zone, retest fail. So let's watch here and see if that happens. But I believe I called, I would be stopped out to the exact tick, did I not, Bruce? How many times have you seen it just on these webinars? Look at that. So I just want to get confirmation that I called it.
Yeah, you did. I mean, I did see it though, like, you know, when you had your stop there and it didn't trigger.
True, but
and it actually traded at that exact price level. But I just, you know, I hear you. I just try to be realistic. It's the same here in New York City when the subway trains come and leave. Oh, I always miss the train. You know, it's not true. Like there's lots of times like it just arrives when I'm walking down the steps, you know.
Well, it just shows I'm just like every other trader too, right? Doesn't every trader think that stop punting is it's personal, right? But
Yeah,
the reason
exactly.
I stress it is because I'm proving it. Like, come in my room and watch. It gets hysterical. It happens 5 times a day. Like, look at this. Am I not imagining that? Well, at least you guys get some entertainment out of here. So now I will short this. If this, I want to see, again, this is an official, we didn't get an ATR below here, so I'm not going to short this zone here that just fired off. I want to see a retest of this zone failure, and then I'll get in, even though it'll be in the middle of this most recent one, I'll still short it. You got 500 buy ice that's underwater.
Maybe talk about your entry there on the short.
Well, I haven't entered it yet.
No, I mean, if what are you looking for?
Right. So again, this is now what you call broken ice, right? This is one of the 5 setups. So this was, we were on here when I said this is huge. Where are we at here? Why can't I find that spike? It wasn't this. This is the one issue here. I can never, like, this stuff blends in. This was a 500. Oh, here it is. Okay. So this zone was off of this. This is 600 buy ice, right? Meaning paper had hidden 600 buy ice. And again, this is a perfect example. Paper's not always right. What's important is the area is important. Straw works. The area is important, right? Yes, paper is the big money and they usually get their way, but when they're wrong, they got to puke like the rest of us, right? So that's what these setups are based off of. And this is all based on my experience as a large scalper, right? So when I was a big trader, I know how to react to trades when they would go against me. And when it would come back, I'd be praying for it to get back to my area that I got in so I can just scratch the trade. And I used to watch other big traders back then. You can see counterparty. I can see exactly how other traders used to trade. So all my setups are based, they're not hypothetical. They're based on how big traders react when they're wrong, when they're right, when, et cetera, et cetera. So that's what these are based off of. So what I'm doing here now, this is officially a broken ice setup, right? It's not very high tech. It's iceberg that's broken, meaning they were wrong. This got an ATR below here, as you saw my exact to the tick stop out. Now I'm looking for a retest of this zone, which I should have waited when I went long here. I should have waited for an ATR retest here that I'm complaining about. But now I'm going to wait for this, and then I will short this off of these guys that were wrong. This zone, 600 buy ice. So I'm just praying I can get back up into this zone so I can short it. See if I got stopped out of ES. No, still hanging tough in ES. All right, so I'm just hoping it can get up to this zone. For some reason, if it doesn't get up here and then this zone, it's a little confusing. Let me get rid of this right now. Even though we did bounce off this, let me just make this a different color so people aren't confused. This was sell ice as well earlier. So say for instance, we don't get up to this zone. I'm hoping we get up to this zone so I can short it, right? So what I need to see now, here's your ATR, here's the zone. Here's the ATR below. I want to see it retest, fail, I'll get in a half ATR. If we don't get up to this zone, I will play off of this zone. Meaning I need to see an ATR below, a retest, failure, half ATR, I'm in, stop goes, an ATR plus 4, a point or 2 to get out of the ATR zone above this zone, right? So again, I was aggressive on this entry of NASDAQ when I should have, especially in an inflection area that I just said, I should have waited for a full ATR, which was 20 plus points, retest, failure, then I get in. Instead, I got in aggressively and I took it on the chin. So I basically bought the high tick and I sold the low tick, which is awesome. Minus the awesome part. So now I'm watching here. I either want to see retest this zone, or if this breaks, then I'm going to short on this one. Let's check out wheat here. So wheat's just basically still sitting in this zone. Gold. We didn't really cover this as far as this. There's a lot of stuff earlier that fired off, but the thesis was short, right? Where's gold? There we go. So this is basically the last stand for gold. I still wouldn't buy here. What we talked about earlier in that session: fail breakout, buy selling tail, retest the high volume node, failure. We got through. This was basically the convoluted balance area, but still was test, test, test. This is a balance area. This is the high volume node. Did we stop at that high volume node like we stopped at this high volume node? No, we went right through it. So this thing may screw around here for a little bit, but I think we're going much lower now, right? This was buying tail, buying tail, buying tail, directional conviction. This is an important zone, but this has failed. So I wouldn't go long off of this because we failed this structure. Now I'm looking for short. If this gets through this zone, you're going to get a monster move, in my opinion. Hold on. So that noise is basically gold getting hammered here. So again, if we get through this zone, I'm going to short this. I mean, you could have shorted it up here. There were signals. There was just so much going on this morning. I didn't even get a chance to put it on, but I will definitely short this. If this breaks this zone, we're coming down to here.
NQ ICE December iceberg sell NQ 154 contracts.
We of course never retested that buy ice zone yet. Still could do it. And hallelujah, I didn't get stopped out to the tick. I did for the second there to torture me, but it got lower, so now I'm okay with that. I don't have to complain about that for the rest of the day. And here comes
Crude
another
ICE
set.
iceberg sell CL 156 contracts.
Check that in a second. I'm gonna just get this zone out here since there's new stuff firing off. So here's some more sell ice. So this is exactly what I said, guys. Like this was an inflection area. So now I will go short on retest of any of these zones. Too bad I had to take it on the chin, being aggressive, but that's what it is. So what I'm going to do here, because this is more sell ice, I'm just going to make this one big zone, right? Because this is another setup. So what I'm going to do here is just, I'm going to do this. Where's all the buyers at? I thought this was euphoria. This is a good lesson too for you guys and girls. If I can get over there. These markets are still intermediate term bearish, just like we talked about. This needs to be, it needs to cover through that high volume node for this to turn bullish. All this is doing is returning from where we broke down. This is where we gapped down. This is where we're struggling. This thing can turn around, like I said, and pull back all the way to this. And guess what? If it gets through this, that's a fail break out of that, and then we're coming down here. So this is getting interesting now. All right. Well, what I wanted to do here is make this one big zone. So I'm going to remove this.
S&P December ICE iceberg buy alert at ES 702 contracts.
All right, so what am I looking for now? Obviously, I didn't get a retest to that one zone I wanted to short at. But do we get an ATR? ATR is 21. Did we get 21 points below this double ice zone, double sell ice zone, the black? 82 quarter-ish. Do we get down to 62? No, that was only 16 points. So we officially did not get an ATR below here. So this is not an official ATR retest fail. That's what I will get short, but I need to see an ATR below here. I'm definitely going to be conservative on the south side, as we all know, with the habitual bungee jumps that these equities do. So keep an eye on gold. If that breaks a little lower, that's going to be a free fall. Stopped out of my ES. I mean, at least I covered half of those. Again, this was the setup, right? This was the most recent setup. You had a Dumb and Dumber that failed. Now we're through this ice too. These things can be going all the way back down. So now you have dual buy ice here. So this is still in this zone basically. So I'm just going to keep this zone. Just know this zone is current. Right? This was buy ice from earlier. And now you had more buy ice in here. So what I want to see now is I want to see this break. I want to see it to get 80 or below there, retest failed, then I'm going to go short off of this. One, because this was prior to, this just came in as well. So this is a big area. I mean, this liquidity is still above, so this could hold and move higher. I could go long here too. This holds. I go ahead. Hold on a second here. This is confusing me now. I don't know why that other line was there. Might have drawn that inadvertently. All right, so I'll stay on a little longer, see if these zones break. Any questions, Bruce?
We always get, questions, and I haven't asked them here. We always get questions about your threshold settings, et cetera. We just, over the several webinars and basically over a year or two now, don't answer these because it just takes too long. And this is all a part of your course too. These are your proprietary threshold levels. So
Right.
I don't mean to disappoint anybody here, but yeah, if you like the way that Scott trades, I mean, his thresholds are the way that he studied the market and what he came up with. So you might want to reach out to Scott directly for that. You've got his email and information. I put it into the chat, and I'll put it in here again. Hold on. I think I put it in
Or,
there.
by trade room, they get those thresholds. We don't, it's not like I cover everything every day, but you're in there long enough. The best way is just get the course, learn the setups, learn the thresholds instead of trying to piecemeal here and there. I even tell guys in the room, it's like, yeah, you're going to learn all the setups and the thresholds eventually, but do you want it to take 6 months? Like, if you want to fast track it, just get the course. It's like anything else in life, right? Learn what you're doing. But if you join the trade room and you're in there, you're going to see me using them. And we talk about thresholds and stuff all the time. There's guys in there that have the course and they'll share that stuff too. But yeah, it's just get the course.
Do you have anything? I'm not sure. I just I can't recall if you get the course. Do you get like a month in the room for free or anything like that, or they're sold separately?
I do have discounts. So if you get the course, you get a discount to my trade room. I think it's 20% off the trade room. Or if you join the course, join the trade room, then you get, depending on the term of the trade room. And so I do monthly, quarterly, yearly. I think it's 10%, 15%, 25%, something like that. So it's either way. So if you join the trade room, you get a discount on the course. If you buy the courses, you get a discount on the trade room. Just go to my website and you can see all that. I don't know off the top of my head what the exact percentages are.
Yeah, I pasted all the information in the chat there for everybody.
All right, so ATR and crude was 14 ticks. It's got 17 ticks below here. So this was an official Dumb and Dumber. I don't want to short this market. So like, again, this is a perfect example, not trading these setups in the vacuum, right? So like, even though it's turned into Dumb and Dumber, this did retest and fail. Like, I don't want to go short based on everything I just showed you guys, right? So then I'll just say, okay, well, if this turns out to sell off, ends up selling off, then that's fine. I want to just look for long setups, right? So depending on what this does here, I think this is just getting started. I mean, if you look at which is not going to be good for us driving gas prices, but you look at this, let's go to the daily here. I mean, this is the next big area. I need to draw this zone in here. Why is this an important area? Well, this is what started this entire down move. This is a very, very important area, and that's not too far from here. So let's draw this zone real quick. Again, I have a course coming out here shortly, soon, one of these days, on drawing these zones in the important area, because they're very, very, you can see, like we just saw in equities, how important those zones were, right? Where you want to be careful, even though I wasn't. That's that, and then you want to get this here. These are both directional conviction zones, right? Directional conviction is very, very, very important. What's directional conviction? That. So gaps are directional conviction as well, right? But where the directional conviction starts is very, very important. So I would love for this to pull back and get a long setup in here and then trade it into this zone and look to cover into this zone. If I get an SI indicator opposite signal, like a bearish signal, if not, if this rips through here, then this is the next step up. I still think this is where we're going up here, but very important zones. So I will take a long here. I would really like to see this pull back and get a long signal down here, get some bias or something, and then I think we can easily make it to 74 today. So a little liquidity up here that just got put in there. So it's not that important in my opinion. All right, let's see what's happening. So again, we never got an ATR below here. So even if it does this and comes back out, I'm not going to short this. I need to see an ATR. Will I consider, and this is most likely going to happen, will I consider a short on a retest of this? Yes, I will. That's what I was waiting for here. It didn't happen. It still could happen. Yes, you are in the face of this a little bit, but it still would not be an ATR above this most current sell ice, right? Meaning you got to be careful. So say this was down here, this black zone, which was sell ice, and then you have this one up here. Well, if this fails, that's broken ice, right? That's a bullish setup, and then you're going to short right in. You're going to short right into the failure of that. That's where it gets tricky. And then that's when you can actually play for one of those back and forth. We saw that yesterday, yes, in my room. But this is close enough to this, so this would not actually be failing on a retest of this broken ice where there was 500, 600 buy ice in here. I could short this, and it's not violating this at all, right? That's not an ATR above this to make this broken ice. So we could go here, here, and then there. And that's what I think is going to happen. So we'll see. But you want to watch this. This could easily go right through here. Would I go long this zone if this just rips right through here? No. But if it not based on this, but I would go long if it got an ATR above this, right? Dropping 21 points, retested this zone, and then started to move up based on this. See how that works? Hopefully that's not confusing. But this zone's done as far as a bullish setup. It moved an ATR below here. This, we still don't know what it is. Is this a Titanic setup to the sell side, or is this going to be broken ice to the upside? Right? I will go long if this happens. I will go short if this happens. I know it may sound confusing. I mean, guys, trading isn't just black and white every day. Most times, most days, these setups are just, spot on. They're not confusing. They're not on top of each other. Some days they are. That's trading, right? You can still glean some information on this, and you're not making a haphazard choice. I know it sounds confusing. It's like, well, wait, I'll go short here, we'll go short here. Yeah, I'm basing it on this stuff. And if it gets an ATR above or below here is going to determine how I want to trade it. So again, the mistake I made being aggressive on this one is I never let it get an ATR above to retest to fail, which I should have for the 5th time, because I was just saying how this is an important area where it could trade either way. So that was a trading error on my part, and I make them all the time. I'm You know, I don't make them as much as I used to. You think after 23 years in the business, you wouldn't make them at all, but it's just human nature. I still make them, especially when I'm on these webinars. I want to, you know, show you guys and trade these zones, like I said, but it is what it is. I probably still would have taken that trade on my own. So, anything else, Bruce, question-wise?
Let's see here. Okay, so no, David, when the stop an iceberg is detected and is read aloud by Bookmap, yeah, I mean, his threshold is a certain number, but it's just reading out the raw data of what actually did transact in terms of stops and icebergs. So that's that. And then can we see market share in Bookmap? I'm not sure what you mean, Mark. No, that's it. That's it, Scott. I think that's everything.
So, you know, going forward, I'm looking for this zone to break. This is massive, massive sided wheat. And, you know, those of you out there saying, I don't trade wheat, I don't trade grains, you're doing yourself a disservice not looking at multiple markets. What you should be doing is coming up with playbooks, exact setups, right? And then looking for real-time volume. And it doesn't matter what market you're trading, it's all the same stuff. It's all based on structure, how the markets react to balance areas, directional conviction, those areas that we've been talking about this entire webinar, and real-time volume. It doesn't matter what futures market you're trading. If you're just staring at one, you're doing yourself an incredible disservice. If you're only looking at a couple, you know, you need to have, you know, I understand some people don't have the bandwidth to be looking at 5, 10 markets at a time, and that's fine. But you should be looking at least 3 to 5, and you're just looking for distinct setups and then looking for your volume to confirm it, and then you trade it. So don't discount, you know, this wheat because you don't look at wheat. You're going to be amazed at how many times, like, this is huge size, and whatever way this breaks is probably going to be the, again, I don't want to go long on this based on what I just showed you, but you know, because I use my thesis is still short this market. If this breaks, this is going to be a huge move lower. This is huge size that is invested in this area. And that's what you need to know. And if you're just trading off bar charts, you don't know any of that. You're like, what? Okay, what's going on here? I don't know what to do, right? So again, the reason I don't want to go long yet this market, and again, we can make this one big one. This is just at the high volume node of this, where we broke down from. I want to see this get above this, and then preferably above that. And then I'll look for longs. Until then, this is just a retest of the high volume nodes of this one and the bigger one. So that's why I want to be short. So watching that for a short. I'm going to go long crude on the next long signal I get here. Hopefully it pulls back and somewhere down here, but if it's a little higher, I'll still go long. Watch that zone above that I just showed you guys for a potential stop. It doesn't mean it's going to stop there for sure, right? That's when you use your, so say we come up here and you get to see some stop and holds, or you see some buy ice, or you just see blue bubbles right through this thing, don't get out. If you see it struggling or you get a better setup, then you get out, right? But just know this is an important area because that's where that stopped, and that's right around 74. So that's what I'll look if I go along there. I'll look for there. Gold is about to be free gold for everybody. This is in a crucial area here. You can see, again, tail, 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 directional conviction. We're trying to put another tail in. I think we're going to probably balance here, and then I'm looking for that because, again, this is showing its hand. It got through this. Now it's probably going to build balance. Again, trending markets do this. They trend, and then they build balance. And they trend, and they build balance. Trend, build balance. That's what I think is going to happen here. That's my thesis. If something changes and this thing rips back up through important areas up here, then I'll change my mind, right? That's what trading is. You come up with your thesis, you look for the volume to confirm it, you trade that way. If something changes, you got to change your stance. Right now, I'm looking for that to happen and at least move down to here. So watch that today. And then equities, again, very important areas. And there's a reason it's choppy right here because, like I said, what's going to happen? Are we going to get to this high volume node and maybe through it, or is this going to pause where this broke down the first time? So far, it's looking, that's a yes. Same thing with NASDAQ. So far, it's looking like, you know, We saw 600 buy ice and that couldn't hold it. That couldn't hold. Like, what if this thing was truly bullish? Why would that not hold? And why would that not be retesting this high volume node right now? That tells you something. So again, I will short those areas that we just talked about for a move back down to this balance area here. If we get through there, you want to watch the high volume node of this one. If we get through that one, then we're making new lows for the last week, in my opinion. All right, one last look at the volume here, and then I'm gonna hop off. So once again, if this retests this zone, this broken ice, 600 icebergs, and fails half ATR, I will get in. Yes, it will be in this middle of the zone, but I'll give it a shot. Say this never gets back up here again, and then we get full ATR below, or we come down and get a full TR below this, I'll look for a retest, failure, half ATR, I'm in there, short. If this recovers this, again, this is already done as a bullish setup because we've violated that. This still could be a bullish setup, meaning broken ice. Sell ice took a stand. If we do this, full ATR this way, retest this, I will go long this way, right? Depending on what happens on this most recent zone. That's the most recent stuff that fired off, all in this area. This is done as far as, but I'll still short that as a bearish setup, but as far as a bullish setup, this is done. But this is not done as a potential bullish setup. I hope that's making sense, right? We just don't know what this is yet because it's still in here. You had sell ice take a stand here. We already know buy ice was wrong. So I would prefer for this just to break to play to the downside because I already know what happened here. Buy ice couldn't hold this thing up. So I'd much rather short this, but if this does this, then I'll go long. I'll give it another shot. That's about it. Let's see this. This should be to the tick, right? Yeah, there you go. There you go. 11 times a day. So all we really did here, so we did have this Dumb and Dumber, and we did pull back. Remember, I got long, at least I covered half of them. I just took a small loss, but all we did here is we retested this zone. So you did get an ATR retest failure. I should be long this zone actually right here. I should have gotten long again is what I'm saying. So ATR is 4.71, so 5 points. So all this was, yes, this failed, but then we moved into this. 2.5 points out of here, half of the ATR. I should have been long, had it right around 39.50. I missed that one. You could go long here. You're just, you're costing yourself 3 or 4 points. Or all you do now is wait for another setup. This held, you wait for your next buy ice or whatever, or stop and hold, and then you go long, which I will do. I missed this one. That's it. All right, Bruce, any other questions? If not, I'm gonna hop off and.
No, sir. I think that's it. And lots of questions in here. Yeah, lots of stuff here in the order flow. Thank you very much, Scott. I mean, again, like as you guys can see, this is Scott does this every Thursday, and this is an hour and 40 minutes of real time analysis and trading. Anyway, you've got contact information for Scott if you're interested in more of his education or mentorship, you can come to the webinars when you subscribe to Bookmap Global Plus as well. Let's see, Carl's asking, can you got IQ Feed DTN offering? Oh, okay, really? Okay. Well, let me know how it goes, Carl. So this is new news. I guess IQ Feed is offering market by order data.
Who is?
Yeah.
DTN?
Yeah, DTN IQ. So far it's crap. Okay. It's a very challenging thing to do. I mean, otherwise they would have done it much earlier. I mean, from day one, Rhythmic had it. They were already set up for it, and as soon as it came out from the CME, Rhythmic already had it. It was ready to go. It was already in the works. It took years for others to start to even develop indicators to understand the MBO data. Yeah, we came in like 3 years later. Anyway, yeah, go with Rhythmic, Carl. Sounds like it's not the only choice now, but the only like viable choice, it seems like. So no, other than that, Scott, no, great stuff. Thank you very much. And we'll do it again on next Thursday.
All right, great. You know, obviously trades weren't great, made some aggressive wrong decisions, but that's a good learning experience for you guys, right? And important areas, you want to be more conservative. You don't want to be aggressive, right? So this is a very important area. Quickly before we go, you can see NASDAQ is failing to stay in this composite. We never got to the top here, and now we're breaking back down out of it. That could be a move back to this stuff here that I was just showing in the bar chart. So pay attention to that. ES for right now, because I just forgot to look at this stuff again at the close. Like it's trying to hold in here, right? So the tendency is to go to the other side. There's that 44.60. This gets back out. Watch out.
Yeah, I mean, another thing, Scott, I mean, I have to reiterate this. Like, you know, Scott went from scalping at the highest level possible. I can't even imagine what it must have been like scalping manually thousands of contracts to this is much higher time frame here. So he's positioning himself here for a much higher time frame move, as you guys can see. It's very, very different. Just need to reiterate, you know, his approach now to trading. And you can do this with Bookmap. You know, it's you can set yourself up for it. And then once Scott gets involved in some of these higher time frame trades, he's layering into it. Several, you know, he's looking for pullbacks, adding more. It's a new setup. He's moving his stop down, adding more on a new setup, moving his stop down. Anyway, it's pretty awesome to see. And then you know, the overall trading results. You have these small losses and you have these massive winners.
Right, that's the whole idea, right? Trading is a percentage game, statistic odds game, right? So you put on trades, and no one on the planet is 100%. No one, most people aren't even 70, 60, 70%. You could be a 50% or less trader if you're risking hypothetically one to make five, one to make four. You're going to be a profitable trader, right? And so the trades I take, I'm looking for that bigger move. Doesn't mean I always get it. So it could turn into a potential scalp based on, if a new setup occurs, then I'm out of the trade. But my intentions when I put on the trade, this has got the opportunity for a massive move, right? It's kind of like this gold right here, right? So it's like if this breaks below here, this has an opportunity for a huge move. This is 200 ticks, right? So if I put on a trade here, if I get a short setup, I'm only risking maybe 20, 30 ticks to make 200. That's almost 7 to 1 on my money, right? So that's how I trade. So I'll take small loss, small loss, small loss, right? And then when I hit it, it's, when the market moves in my way, then I'm making 4 or 5. Then it takes me, so if I catch one winner at 5 to 1, I can lose 4 other times and still be profitable. Get it? That's how you want to be trading, in my opinion.
Well, go back to that candlestick chart for just a second, Scott, because I just like, setting expectations for bigger moves is, I just think, really kind of critical. Let's say it does break here. How are you looking for this to break? How many hours do you think it's going to take before it hits down into your lower levels there?
I mean, with gold, it can happen in 5 minutes. Right?
That's not the answer I was looking for, but
no, but it could take hours, right? It could, right? But the thing is, if you're in it overnight, then that's when it gets tricky, and that's when I usually take losses because I can't watch what's going on. But like, look at this move here. This was on a Sunday night. I mean, look at this. This was like, this was all basically, this is overnight, and then we opened up and traded, did nothing during the day, and then just, I mean, actually, this was the Sunday night trade. This was the Friday trade, I think. But this thing could get going. But yeah, it could take hours. It could take minutes.
That there though is like probably 5, 6, or 7 hours at least. Right? Maybe more. That's an hour chart.
It is the
1,
overnight.
2, 3, 4, 5, 6, 7, 8. Yeah, it's like 8 hours, even on that big move.
Right. Right, but then you
So-
manage your trades, like you said, like as a setup comes in, then I can add to the trade and then trail my stop. Or if it's an opposing setup, then I get out and then I wait for my next opportunity, right? But I still keep the same thesis. I'm just out of the trade right then because the real-time volume is telling me this isn't ready to go yet, right? And then I just wait, I get out and I wait. If no real-time setup comes in, against me, then I stay in the trade.
Right.
Right? I mean, I'll piece out in certain areas, important areas like, market profile and stuff that we've been talking about, but I'll always keep a core position on until I see an opposing setup on the book map SI indicator setups.
Yeah, makes sense.
All right, so keep an eye on these. Again, if this NASDAQ gets going, I want to see this get an ATR below here, retest fail, I will be going short. It will be glorious.
Is that a movie quote as well or not?
No, that's my quote.
I think old school has "It'll be glorious."
Oh, it's glorious. No, yeah, that was
Maybe that's "I see
Will
blue."
Ferrell.
I see blue.
I see blue.
It's glorious.
That's work, Bruce. Yeah, I've been lacking on the movie quotes today. That's what happens when you get your head ripped off of NASDAQ. You're not so jovial. All right, guys, I'll be back next Thursday. And from now on, I'm not being aggressive on my entries. I'm sick of doing that. Again, I feel a little pressured to put on a trade. Not pressured, but I want to show you guys some trades instead of just talking the whole time. But from now on, I'm being conservative with my entries, and that's going to help you guys anyway. So that's probably the best way to trade these setups is the conservative route anyway. So I will see you next Thursday.
All right, excellent. Thank you very much, Scott.
Thanks.
Okay,
See you.
bye-bye.
Bye.